asset class?
Well, I think just generally Wall Street and the everyday man on the street, we are all facing the same problem of fiat debasement. Is global debt to GDP is well over 300% at this point. I mean, Jerome Powell, my Fed chairman, went on 60 Minutes after I was watching LeBron James shoot hoops and made sure that I was aware that my government is on an irresponsible spending policy that's going to drive this country insolvent. So I think the fact that in the face of a hawkish Fed, gold was going bull and trading up, I mean, that's everything you need to know, that people are terrified of fiat debasement and the value of the dollar, especially in an election year. So I think Wall Street wants access to hard money, scarce assets. Nothing's more scarce. So the fact that this ETF opened, I think the timing makes a ton of sense. And then for all the people that, BlackRock doesn't really like Bitcoin. Oh, really? Well, I don't know. They seem to be buying up a bunch of it. Their clients love it. So that's what I think it is the hardest money is going to win in the face of fiat debasement. Bitcoin's the best expression of that. I think the price action is a lot simpler than people make it out to be. It's because Bitcoin is the only asset in the world where more demand can't find more supply. It's a demand supply shock to the upside. What's important for your viewers is contrast that against something like gold or something like a stock of a company. There's a lot more gold in the ground, in the earth, but there's not enough demand for us to go dig it out of the ground. If there was enough demand for gold, we would find more gold. Let's take Facebook stock, for example. If there was enough bidders for Facebook stock or Meta stock, Zuckerberg would issue more. He'd split the stock, right? So more demand, Kate, always finds more supply, except for Bitcoin. It's the only monetary asset in the world where that's not true. So more demand has to find a higher price. More demand, the supply is coming from existing holders. It's not coming out of the ground. It's not coming from a stock split. Does that make sense? So they're going to have to get the price high enough for a holder like me to be willing to sell it to BlackRock. And they got a lot more to go to bid to the upside to find that. So you're just seeing price discovery in a very scarce asset. The store value piece, you just cannot understate that. All 8 billion humans are going through fiat debasement. What that means in more layman's terms is every single person's fiat currency is going down every day. The dollar, the naira, the pound, every single fiat currency issued by a nation state goes down. So you have to own something else unless you just want to be poor, which none of us want, right? You got to find a way to own something else. And this is the best performant, best expression of that problem, and we all have access to it. So that cannot be understated. That is the most attractive use case that's made this thing go so viral. I think the other that's really fascinating that we focus on as a company more and more is the fact that you now have a digital bearer instrument. It's a digital physical instrument. And the fact that we can move value on the internet is fascinating. You can disintermediate a lot of payments. The fact that I can move something physical from Chicago to Nigeria instantly in less than a second should really bring the cost down of something like a cross-currency transfer, right? So I think that there are use cases that we'll begin to see, but right now, the reason Wall Street's interested is that store value use cases. Dollars are being printed out the wazoo since COVID, and this thing just goes up the most in the face of that. All over the place. And for us as a business, that's one of our main focuses is being one of the best in the world at Bitcoin, period. We don't get distracted by NFTs. We don't care about creating our own blockchain. I don't care about what Dogecoin. I mean, come on, Kate, what are we talking about? Dogecoin is going to be valuable to society in 20 years? According to who? No way, right?
And Elon Musk thinks so, at least.
Yeah.
Is that more of a bit, or do you think that people actually think there's value in Dogecoin?
I think it's a bit. You tell me, what's Dogecoin going to do for you? I think.
Full disclosure, I'm not a Dogecoin investor, so.
No,
anyway.
I actually find all the altcoin industry antithetical to the whole thesis. It's a form of inflation to the asset class. I'm going to create Jet Coin, Solana Coin, Ethereum Coin. None of these things act as a hard money. And so, what we've seen running Strike is that there's a lack of focus on Bitcoin being the most valuable money and the most valuable technology out of this sector and applying it in every single market around the world. Because you're right, Kate. You want to know the person that wants Bitcoin more than the guy in Chicago? Probably the one in Nigeria, right? Probably 250% more according to inflation metrics, right? So, yeah, we just have that focus. We see the demand all over the place, and it sounds like a really simple business, but it's really unique because businesses like a Coinbase are so scattered through all sorts of things, which doesn't make them bad. It just makes them very different than us. Is for every altcoin feature they build, we build a Bitcoin feature, and so we consider ourselves one of the best in the world, and just doing it all over the world has been good business for us.
Seeing outflows. I've seen recent data. Bloomberg says 7.4 billion of outflows in the last 30 days.
Well, I think it's important to think about how GBTC came to market. It came to market with almost $30 billion of assets and investors of all shapes and sizes. And so we anticipated some outflows as opposed to some of the new products coming to market starting from zero. I do think, though, if we zoom out and we look at what that investor demand is like, we've never seen such insatiable demand for an ETF wrapper providing access to, a new asset class like we have here.
Coming to Ethereum in a few weeks, that's expected to slash transaction costs by 90% and vastly improve profitability of the companies that are built on top of the blockchain. There's also a lot of optimism that a spot Ether ETF could be next.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And I have a good one here for you for Friday. We have Jack Mallers, of course, telling the truth about the Fed. And the fiat is dying. And it is globally. Not in these third world countries. It is global, and we see it definitely inside the United States. But what he doesn't tell the truth about is altcoins. Guys, we know a lot of these altcoins have real use cases, and we know DeFi is definitely the new banking. We know energy tokens, gaming tokens, NFTs are nothing but digital IDs. Remember, on television, it's all about the Hegelian dialectic. And then we have Grayscale speaking about the outflow, 7.4 billion. Now remember, guys, in these 2 months, I think the ETFs, the spot Bitcoin ETFs, have about 17 billion. So the type of price move that we've had is all coming from the institutions, the hedge fund guys. They're coming in to take your money. Enjoy the ride, but don't get greedy. Of course, your hodlers, you sit back and let it play out. We know the fourth industrial revolution is definitely the go. And we have inflation being stickier. And guys, we know this is nothing but corporate greed. And we know anytime we get numbers that say the opposite, the media tries to tiptoe around it, tries to spin it. None of these labor numbers are correct. We see layoff after layoff, but guys, we know we're in a fragmented world. Also, you're in a plan. You're in a simulation. It moves in phases, and we're starting to see more banks collapse. We know that's going to hurt more small businesses. We know they're in trouble. And then, of course, more layoffs. Why? Because they want the machines to take over. And I go over the repo on a daily basis. And we know in March, it starts the Royal Rumble. But remember, we're in election year. They're going to try to hold it up until the end of the year. We know what's about to happen. But that's the reason why the drums are just going to get louder. Remember, the NWO, the master magicians. Remember, in a crisis, you can do things you normally would not have been able to do. And then we have Mayor Eric Adams selling us on immigration. Nothing but the Hegelian dialectic. Those in my Patreon know I've done plenty of videos on this matter. Because, guys, it's in the playbook. They've done this before. But this time, because we have social media and all this technology, everybody can see everything. But the only thing they have to do is set up the illusions. Remember, Americans will never fall for the fourth industrial revolution. Anyone born in the 80s, going on up, 80s, 70s, 60s, 50s, they're not going to fall for the fourth industrial revolution, whether they're conscious or not. And the NWO understands that. That's the reason why you bring in people that are happy because they came from nothing. And if you just give them a little something, they're going to be happy. They're going to be on your side. They're going to do whatever you tell them to do. And that's the reason why we're getting affordable housing, universal basic income. You're getting free money, and eventually it's going to be airdropped to them. because you want to be able to identify people, then they're going to have the digital ID. So this lays down the groundwork for the fourth industrial revolution. And then if you have WW3, people can go outside. That gives you the opportunity to build these 15-minute cities. Use the driverless cars, the drones. So therefore, people are accommodated and they'll be sitting at home, sitting on the couch, traveling the world in the metaverse. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
If Torsten is just looking at what Fed Chair Jay Powell, what he's following,
right.
Those are the headlines. There was a huge scandal that broke out yesterday because word leaked that the Bureau of Labor Statistics had incorrectly calculated inflation and that it came out higher than it should have. So it was all over the Bloomberg chat rooms and what have you, Charles. But it's clear that a lot of the data that we're seeing simply does not reflect reality. Look, we for the past 6 months, we've had about 60,000 job cuts announced.
Right.
But that shot up. That shot up in January to more than 103,000. It came in for February, just 29 days, 80,000. And we've heard from today, BNSF, huge railroad laying off in 4 states. We've heard from Moderna as well. The announcements keep coming, Charles. States, they're tired of hearing about the inflation that is still kind of sticking around, if you will. Even though we're seeing major disinflationary pressures, they're going to get they'll be doubly angry if they start knowing people. And I'm asking people on the street, yes, I know somebody who's been laid off. Yes, I know somebody who's been laid off. Sure. They're going to get really angry if the government starts to tell them that they're imagining job cuts.
And because all
companies on behalf of News Corp, we have them saying that they're having a harder time collecting money. They're putting more accounts out for collection to collection agencies than any time since 2009. And they actually said a few days ago, we see what the data suggests. As far as we're concerned, we're already in recession. Google's one example. They paid out $2.1 billion in 2023 in severance costs, and they announced that they were going to be paying out $700 million in the quarter ending March 30th. So that tells you that they're going to be laying off more people in 2024. But again, big companies like that, they're giving their employees 6-9 months of severance pay. In the reserve repo facility emptied out because the money market funds took that money and moved it they took it out of the surrogate and moved it into the real thing, into treasury bills. Mm-hmm. So when it was $2.5 trillion, there was a lot of cushion.
All right.
The economy could hit a deep pothole. The closer it gets to zero, the more of a risk, once that facility is fully depleted, is reserves start to come out of the banking system. Now,
we don't avoid financials in general, but we do hold JP Morgan. We avoid companies with a lot of leverage. And right now you're seeing companies like New York Community Bank, Commercial Bank, have exposure in the real estate sector. They could have commercial, they could have industrial, they could have multifamily, but that's a stress. That's a big stress. And some of these regional banks are experiencing that right now, being over-leveraged.
Can go around in so many different sectors is how do we solve the problem? 177,000 migrants and asylum seekers have found their way to New York City. And I think there's a clear way that we can solve this problem. Number one, we need a real decompression strategy to allow this to go throughout the entire country. And number two, we need to allow people to work. What is more the American dream than the right to work? You cannot prevent that if we want people to take the next step in their journey.
An experimental program to provide debit cards with cash on the card. This has created an enormous controversy in the city among some taxpayers who say, why are we paying and giving out this money to these migrants? And isn't this only going to encourage more migrants to come to New York?
And the reason it's creating such controversy is because how it has been reported and distorted. Here's what we're doing. We are required to feed migrants and asylum seekers as well as everyone else in our homeless system. About 40,000 are in the homeless system that are not migrant and asylum seekers. We're required to feed them. And so what I told the team to do is we have to find a way to do it that's less costly because we're in a 30% decrease in the cost of the migrant crisis, and that we don't have food waste. We were able to do that. We're saving approximately $600,000 a month, $7.2 million a year by giving individuals a card that allows them to buy food or baby supplies, spending $13 a day on food. That's cheaper. That's less food waste. This is a real win-win for us. And the money will go into the local economy because now we go into the local stores, supermarkets, where we're going to hire local. This is a smart way to bring down the cost and replace the money back into our city.
Going to a different economy, and we're going to be learning more about that as we go, but clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury